Welcome to the Swing Trading with Cycles channel. We're going to do an update on the broader market. We're going to focus on the Nasdaq 100 because that's the one that's outperforming, but we want to get a flavor of how everything is doing. And that's what this chart here is. This is your monthly chart across different indices and really kind of groups of stocks. Welcome to the channel. It's March 18th, 2023. This is our weekend update. This is one of the most important updates because this tends to guide the general direction of the markets. And so you can see here, starting from left to right, we have the S&P, Russell 2000, and the Dow. You can see all of them are red on the monthly chart. The Russell 2000 is the worst of them. Look how far below last month's low that is. That's a big red candle. And we obviously have more to trade in the month, but it's always important to know what the monthly chart is doing. You see people on Twitter are like, oh, wait, the monthly chart isn't complete. Why are you looking at it? It's like, really? And then you have the Qs, which is green, obviously very different than the others. So, and the Qs being the Nasdaq 100, of course. And I talked about this on Twitter. Definitely take a look at the pinned comment. If you're not following on Twitter, there's a link there. There's also just past videos. It gives you some context here. The Qs are doing something really special here. And of course, they could break down, get pulled down by the rest of the market. Because again, look at how red this stuff is, right? So this could get dragged down. Don't get me wrong. But it's on pace for a bullish outside month, right? So we made a lower low below the low from February. And now we're on pace to make a higher high above here. And we'll zoom into the lower time frames. It does appear that we're early in a new daily cycle. So you would expect a rally, and so you would expect this to get filled out. SMH is actually, and that's the semiconductor ETF, is not on pace for a bullish outside month, and that's only because it didn't make a lower low. So in other words, it's actually stronger than the Qs. If you were to decide where to allocate capital, if you had to choose between the two, it would be SMH, at least as of now. Of course, there are many components within SMH that do look stretched. And then you have your like Vanguard Value ETF VTV. I mean, look how this thing is rolling over. Yikes. That looks much more like the Russell 2000. And of course, you have your Vanguard Growth. That has made a lower low on the monthly, but has now gone green. So again, it's the same pattern as the Qs. Not surprising. And then you have your monthly chart for gold. My God, it's just made a new high on the monthly chart. And this is spot gold, 1988.50. Separate video. I'll do a separate video about that. Again, take a look at the pinned comment. You'll see everything on this channel is organized into playlists based on the asset being reviewed. Now let's zoom into the Qs to get a sense. I said they're doing something special, and let's look at the month. We'll look at the daily chart first, and you can see the idea here is that this was your potential daily cycle low here on day 50. And the thing is that this could have been a daily cycle low here, and this was your daily cycle high. If that were the case, we've already made a higher high above this, which was the DCH, which was supposed to be the DCH. So it's not the DCH anymore. So like there are a few ways to look at that, right? So you could say we're in a failed daily cycle because this was your daily cycle low. We made this little high. We made a lower low, but now we've come up and made a higher high again. So it's complex. I say keep it simple. We are in an uptrend on the daily chart. This is the fourth day of the uptrend, or was the fourth day. Friday was, and now it's very simple. The setup. We're gonna have we're set up for an inside day to open the day Monday, and so that doesn't mean we're gonna close as an inside day, but that gives you a sense of the levels you want to be aware of, right? So you have a candle, something like that. So as long as we're between 309.15 and 303, it's basically not doing a whole lot, and that's obviously actually a pretty big range. It's like $6. I mean, a decent size range. So that gives you a setup though for clear levels that if we can break above this inside this consolidation, we're up and to the right. Now, we obviously have the Fed meeting next week. So it wouldn't be surprising to see us consolidate inside this range and then make a decision on Wednesday for up versus down. And if this is day 4 of this new daily cycle, or let's just say that this is your daily cycle low, and so this is actually maybe more like day 10, more importantly, on the weekly chart, it appears like the possibility is that this is your weekly cycle low here on week 22, right there. And more important than that is this very rare pattern that's just formed. I hope you can see that. This week here, so that was the week of February 27th, was a bullish outside weekly candle. You can see that, and we talked about this in the previous videos. You can see this candle. This candle makes a lower low than this candle, and it was red at that point. In real time, it was red, and then it blasted up and made a higher high. It became a bullish outside candle. So again, the same way that the monthly candle right now is on pace to do that, this did that. And then the following week, we made a higher high, but then made a lower low. That is a bearish outside candle. And we didn't even make a lower low by that much, which I guess you could say was the tell. And then this coming week, we made another lower low, but then we made another higher high. All that to say, another way of saying, these 3 weeks in a row have been outside candles. Bullish outside candle, bearish outside candle, bullish outside candle. So up, down, up. That is so rare, in fact, that it has only happened just now for the entire history of this index, going back to like 1999. Very interesting. So to dig into that just a little bit really quickly, we're going to use Excel. Just remember, the chart is just a form factor. This is all data. It's data analysis. There's actually only been 11 times, or I should say 10 times previously. I guess it's actually 9 specific instances where we had 2 outside candles in a row for a weekly candle. And then we just made 3 outside candles in a row. So if we look at, and these are your dates, right? This is obviously not a great period. So, I mean, we can go back and we'll look at this raw data, but like we can kind of see that's very volatile action. And you can see they're highlighted here. So this is like, I mean, again, we're going back to like 1999 when this thing was, this index was, this ETF was created. And so you have this period here, right? Where, and this is a really cool Excel. These are a bunch of formulas I pre-populated here. This tells you if the candle made a higher high or a lower low, and if it was green or red. So obviously, higher high in green is the most bullish condition you can have, but lower low in green is actually not terrible either, because that sets up for a potential swing low. But the point here is you had this red outside candle followed by a green outside candle, and the next candle after that was a green higher high, so very bullish. And then after that, you had a red outside candle, actually. So massive volatility. But then you actually had 3 weeks of green higher highs. So that's great, right? Like, and again, that instance was going back to, that was in January 2000. And you have this instance here where you have red outside candle followed by a green, so a bearish outside candle followed by a bullish outside candle followed by a green higher high. Then you have this that was followed by a red higher high, which is to say it makes a higher high, but then it doesn't go any further. There's no more follow through, but it also doesn't follow through to the downside. And so that's basically consolidation at the upper end of the range, which is kind of what we're seeing on the daily candle, for instance. So we're talking about periods where we had 2 outside candles, and then the next candle tended to be a higher high. Again, here it is, a green higher high. You had a bearish outside, green outside. You have a green higher high, and then you actually make a lower low, but it's a green lower low, and then you have 2 green higher highs, so that's good. So you can see this is a way of thinking about what's happening on the chart without even really seeing it. This formula kind of helps you, and this makes it's very objective. Again, this is just price data. And so again, so you can see in these instances that this is also a higher high after. That's a green higher high, that's pretty bullish. That's a red higher high, not super bullish, but it's just consolidation. So in this case, instead of making a higher high or a lower low, we just made another outside bullish candle, or an outside candle, and in this case, it was bullish. So you can see we go a bullish outside candle, a red outside candle, and now a green outside candle. So what do we think comes next is really our question, right? Well, I think the odds are high that we're going to complete this pattern and we're going to make a bullish outside monthly candle So that gets us above 313.68, and we closed here at 305. So that's a nice little upside. And if you just think about, and I tweeted about this, there's no reason why this can't be our bottom, and we couldn't see more follow through on like the, in the April candle, which also keep in mind will be a new quarterly candle. Let's flip to that really quickly, so you can see that's the other piece that's really important here. If we can close above the high of this candle here, which is at 296.88, and we're obviously a good deal above that. That makes this a quarterly swing low here. So we had 4 quarters of decline, 4 quarters of lower lows. This quarter makes a lower low. This quarter makes a lower low. This one makes a slight lower low. And then we have a final lower low in Q4. And now we're making a higher high above that lower low. And the next obvious target is this candle's high here at around 334. We may find resistance because this is where we had a little bit of a rally. This candle was green, and then it kind of completely failed. So after you make that bullish outside candle at 313.68, I'm looking up towards 334. Now, obviously, we have the Fed meeting next week. That could change everything. And the beauty of that is if it does change everything, it'll be a strong trending move to the downside, which is fine because you can make money off of that as well. You have to remain nimble. But it's important to see through the macro bearishness, for instance, and just objectively take a step back. So like clearly we're in historic times in terms of patterns, and this kind of volatility isn't inherently bullish per se, but it certainly means some potential strong trending moves, even if they're on lower time frames. And so that's something that we can take advantage of. So let's just look at the S&P and the other ones really quickly. So the S&P, again, we have massive divergence as we talked about at the outset. We have a red monthly candle for the S&P, whereas the Qs are green. And notice the S&P is still below last month's low, which is the same for the other major indices. But at the same time, the S&P is more of a doji candle than anything, whereas like IWM, for instance, is just, it's near the lows at this point. And that's important because it means where is April likely to open, right? It'll be something more like this. Whereas with the S&P, obviously we have quite a bit to trade still, and we have the Fed, but you're setting up for something like this, right? Where you just get a little bit of, like where April is inside the range of March, even though we're below. And that's not necessarily bullish either. It's just telling you we may not necessarily kind of fall off a cliff. Now, again, all bets are off once the Fed announces what they're going to announce. So we'll have to see. Who knows what they're going to say. I mean, imagine if they did something completely unexpected, which we're in that realm now because we're in that kind of zone. And so if we look at the S&P, thinking about the daily chart, the extreme bearish scenario is that this was our daily cycle high at day 2. And now we're descending into a daily cycle low. This would become just a lower high along that path is what we would expect. So that maybe this goes a little higher and then something like that. Now, important, remember that structure for the Qs. The Qs have already made a higher high above this high, and look how far below that the S&P is. I mean, this is pretty massive divergence here. We'd have to go up another 3% almost. And that's obviously a big move for the broad index. So that's big divergence. And again, we'll have to stay nimble to see like which side of that does it break. And you can see even the daily candle for the S&P, the Qs was more of a doji, whereas with the S&P, you're set up for it more likely to be closer to the downside, to the lower end of the range. And if we look at the weekly chart, we did close green for the week, so that's positive. And again, also possible that this is our weekly cycle low for the S&P, just as it's possible that was our weekly cycle low for the Qs. And I think that's on week 22 as well. Yeah. Just not as bullish because obviously, again, not to belabor the point, but look how far below the low of that weekly candle we are, which is the same kind of idea as how far we are away from that peak on the daily chart. It's the same idea, right? Like this peak here is the peak here from this weekly candle. That's why the multiple time frame analysis is essential. So if we look at IWM, same story, just dramatically, like just even more bearish. I mean, look how far below the peak we are. So the S&P would need to climb another 3%, and the Qs would need to climb, yikes, another 12%. Or excuse me, not the Qs, IWM. And if we think about daily cycles though, that's actually important, right? So where does that put us? So if we say we have our top on day 5, we would be on day 15 right now. So that's actually pretty helpful, because if we do get follow through to the downside, it gives us a good sense of how to, how aggressive to be in our shorts. Like knowing, like, wait, are we expecting some kind of rebound soon? And so this was a inside candle on Friday. So you're setting up for a move below these lows. So call it around the 171 level to potentially take you down to like 166, like really the low 160s. Because ultimately, what we're doing right now is testing this last low. And so if and when that breaks, I mean, it looks like we're consolidating right on top of it. You imagine we find ourselves down in this low 160s area. So it becomes a nice little short from like 170 to 160, actually, which all sort of suggests that the Qs get pulled down too. We'll have to see whichever way the move is trending strongest. And of course, again, the Fed meeting is going to be really important in that. And you can see this looks like it's nowhere near, like this is a pretty dramatic move lower on the weekly chart. That doesn't suggest you've made a weekly cycle low here. So again, this is a really complex market in the sense that things are not all moving together in unison by any means. I mean, this is so dramatically different than the Qs chart. My God, this is good. And so what this sets up for is an inside candle on the weekly chart next week as well. And so that gives you pretty clear levels. Like you can't get too excited if we're just consolidating inside here, because that could be preparing a dump lower, really to kind of sweep these lows potentially. Yikes. So that's IWM. And finally, we'll look at DIA, which is the Dow, and that is also not looking great. So this has a similar look to the S&P in that, it's a candle that went green on the weekly, but got nowhere near making a higher high above the previous week's candle. And in this case, we topped out, remember, on week 11, whereas the S&P actually topped out on week 16. So this thing has been falling for longer, yet it hasn't given up much of this rally. Like, let's see, like how that is okay, so that's a 61-point move, and we've given up about 32. So we've gotten right about to the 50% retracement. So it's about where you wouldn't be surprised for us to like this to be a bounce that kind of sustains for a little bit. So that's going to be an interesting one to watch. And again, same kind of setup for a weekly candle, for an inside candle, because of all this wick. So just inside the range of 320, 371, and 315 essentially. So that's your lay of the land for the broader indices. The Qs are the ones to watch. Massive volatility there, but clearly money is flowing into that relative to the other indices. And I'll actually look at SMH, as I said, really quickly. That's the one that's moving, right? Like, I mean, look at this thing. It's telling you, like, look at this. This is a bull flag that's just broken out. So it doesn't have the same pattern of like 3 outside candles in a row, but this weekly candle was a bullish outside candle, which is just, I mean, the setup here. It doesn't mean it's not a guarantee by any means, but I mean, this is screaming this. And the obvious target, if we get the bullish continuation that this suggests, is eventually in the 72 zone, right? So getting above there is what we would expect. I mean, so maybe we don't do that all next week, but you could see that kind of developing. So that's the lay of the land for the broader markets. Thanks for watching.